Well, good morning to you all. Tony Virtue speaking, Virtue and Partners, with our regular monthly update. And I guess dominated by interest rates going up yesterday in Australia. Probably some would say well overdue. But it's been 12 years since rates have gone up. And that means clients under the age of 30 have never seen something like this happen. Try and look at this positively. On that treadmill, you only speed up if you've got the capacity to run a bit harder. And this has always been a double-edged sword. On one side, yes, it's inflated asset prices because obviously mortgages were very, very cheap. Against that, it really did hurt retirees. A lot of the money they were earning was well below deeming rates. So generally, it's a bit like getting a dose of the flu. What you really want to do is go hard and early, 2 or 3 quick hits, and then stop and see how the patient is going. So it would be wrong just to assume that rates will go through the roof from here. It may well be that there'll be deflationary pressures coming through. It may well be, as we open up our borders, etc., that it may well be less traumatic than the punters are saying at the moment. Well, obviously we're in the election cycle, and both parties have indicated that they will increase the amount of money you can earn as a retiree and still get the seniors card. That's important, and to my mind should not even be means tested. In addition to that, the Liberals have said that they will not touch deeming rates for the next 2 years. Now that is very important because as interest rates rise, it will mean we can lock in clients into annuities, term deposits, so they'll get a higher rate of return without taking the equity risk that we've been forced into doing over the last few years. So what do we expect from here? Well, you would imagine that the property market will, just drift around at the moment, and that's exactly what has happened. That takes pressure off the regulators to go too hard on this. We need the economy to be going forward. We certainly don't want to be now just really parking 2 buses, if I can say that, and just hanging in there. We still need to be moving forward as a community. But I think the way to look at this now is this should be a time where it's going to be a little bit tougher. Income is going to be very important. Income from investments will become more important, and you can see that trend away from some of those growth shares, particularly internationally. It's very closely linked between 4 or 5 companies that are, I'm talking your Amazons, your Apples, your Microsofts, collectively worth the same size as Western Europe now, just to put you in context, and each of them bigger than the Australian stock market. So you do have these global monohaves that really can move a market. Internally, we're going to be very busy over the next 2 months. Unfortunately, there's an awful lot of paperwork that needs to be completed. I'll cover some of that in separate communications with you. But life goes on. Look at this as a positive step with interest rates, and embrace this, and upwards and onwards. I look forward to seeing many of you face to face very soon. Tony Virtue, when experience pays.